Three companies just reported, guys. Sbux, Ford, AMD. We're going to go through them right now. Mo went to Sbux a lot this last quarter. He's taking full credit because they beat on both earnings and EPS.
Correct.
Revenue and EPS. Sorry.
Correct.
Go ahead.
Shaken espresso, what is it? I don't really know. I just put it in the app and say, let's go. They came in, expectations, 65 cents of earnings. 74 was what they hit.
Yeah, that crushed.
74 cents. And then they were expecting $8.4 billion in revenue. They hit $8.7 billion.
And look at that.
Really?
They're down.
Wow.
They're down. Not down much. And you know,
But
when
still, you would from this, that's a crush.
That's the point.
Yeah.
If you told me ahead of time they're going to crush by that much, I would have said, oh, the stock's going to be up a ton.
100%.
Guys, this is exactly what we talk about. So if you're new to the channel, we like looking at earnings just for the fun of it. And we want to hear if there's any fundamental long-term issues in their calls. So like Mo and Dalton's one of our research guys. They'll listen and they'll read their phone calls. And they'll listen for longer term statements. Like, for example, if Sbux came out and said, listen, guys, we just realized that half our locations suck and we're closing them. That would be a very important thing to know. Obviously, it doesn't happen. But in terms of beating versus not beating, we could not care less. In fact, we hope they miss every single time the companies get crushed because we are value investors. Our goal is to buy great companies at great prices. You don't get that by companies always beating the stock going up. You get that by the stock going down. Now, also if you're new to this channel, on Thursday at 6 p.m., we have a free webinar where we're going to teach people how to do covered calls and cash secured puts. A great way to get a return on the cash, senior account, and make a few extra percentage points on stocks you currently own, stocks and ETFs. So sign up at the link below. It's free for everyone, whether you're part of a community or not. But sign up for the link below, and you'll be able to sign up for that to learn how to make a few extra percentage points a year on your money, which adds up big in the long run. So Sbux still down about 1%. Now, right here, Mo, 125 billion market cap, $160 billion enterprise value. That difference is roughly their debt. Decent dividend of 1.8%. But here's the thing I don't like: their dividends are $2.3 billion. Their free cash flow last year was 2.2, and their 5-year average was 4. That's a big chunk of their free cash flow.
Yes, it
right?
Is. Yes.
But look at this: 5-year return on invested capital.
Holy moly! That's
49%.
Huge. I did not expect that from them.
I did not either.
Wow.
So what does that mean, guys? They get a great return on the money invested in their business. When they go open a new store, they make a ton of money.
Right.
That's the point. So they're going to get a very high return. So the question becomes, how many locations do they have right now?
Oh, let's look it up.
Yeah, why don't you Google that? Because the growth for Sbux, yeah, they're going to grow naturally, but they're going to get major growth. There's 16,000 Sbux in the United States as of April 10th.
There you go.
But what about the world?
Let's see.
In the United States, that's 16,000 Sbux. That's 330 per state, roughly. And New York has 3 on every corner.
35,000
stores worldwide.
Yep.
As of September.
Yep, that's right from their website.
All right, so how many are in China? How many are in India? And how many are in Africa?
So China.
Oh, wow, 6,000?
Yep.
Kind of surprised by that.
Yeah. India.
306. Oh boy, there's a lot of growth there. There's going to be like none in Africa. Wait a second, South Africa, 16 to 25.
Yeah. So it doesn't seem like.
So the reason I bring this up.
It's a small number there.
The reason I bring this up, China, India, and Africa are the next frontiers of growth in this world. How many people are in those 3 locations? A lot. China and India alone have 3 billion people combined.
Right.
The world is 8 billion.
Right.
They have, what is that, 24% of the entire world? And then Africa, how many people are in Africa currently? The whole point is there's still a lot of growth potential for Sbux. Mm-hmm. And it's a global brand. Everybody knows it. Everybody loves it. So eventually, even me who doesn't drink coffee, I still go to Starbucks and get my double chocolatey Frappuccino. Skinny, it's like 120 calories. Why'd you laugh? Skinny. All right. So I don't like this.
Yeah. Especially going back and looking at their free cash flow back in the years, that's a big number, 2.3. I mean,
very inconsistent cash flows if you look at that.
It is. I mean, you see in 2018.
So you might be asking, when you see these numbers, so what Mo was showing here, let's look at the cash flow number here. Look how inconsistent this cash flow is. 2.2, 4.5, 183 million, 2.7, 10.5, 3, 3.2, 2.6. When you have this, it's really important to look at a long term. Maybe more than 5 years. Maybe you have to look at 7 years. I know Ben Graham used to look at 7-year earnings on companies. Let's look at their. What are you rolling your eyes to?
They buy back a lot of shares.
Do they?
Yes.
And they're expensive.
And they're expensive.
F.
Like, what's their PE right now? Oh my God.
34.
Yeah.
So guys, 38.
PE of 41, and they've been buying back shares aggressively.
So guys, you always hear people talk about buying back shares. Everybody's like, "Yay, buy back shares!" No, we don't want people buying back expensive shares. Let's look at the 8 pillars. Okay, cash flows dropped. That's because they had a $10 billion year 5 years ago. Not worried about that. I'm more concerned about the multiples. The 5-year PE and the 5-year price of free cash flow. And guys, remember, if you have the software, you can do your own custom pillars here. If you don't have the software, everythingmoney.com, $1 a day for 7 days. It's our new special. Sign up. Guarantee you'll love it. Every single one of our tools here is worth $1 a day. You get the whole thing for $1 a day. Don't be stupid. Just sign up. It's very easy. Analyst estimates. Oh boy, look at that. Doubling their EPS in the next 5 years. Doubling their EPS in the next 5 years, Mo.
That's probably because of all the growth that they have.
Plus they're buying back all those stupid shares. Guys, we really hate it when they buy back expensive shares. We really can't stand it. It's bad capital allocation.
What's their revenue look like?
$7 a share.
Wow.
If you want to multiply it by 18, that's $126 share price. What's the share price currently?
Share price is sitting at 114.
Okay, so I just took $7 in 5 years, multiplied by an 18 PE, and got to 126. The stock's currently at 114. So it seems overpriced. Let's see what the revenue growth. Oh my God, double digits revenue growth.
Exactly. It's big.
Okay, let's go to Stock Analyzer tool.
Let's do it.
Mo, you do 10 years, I'll do 20 years.
Okay.
Okay, so I'm going to do... Wow, I can't believe that revenue growth.
Me too. I'm going to... Let's see here.
Bum, ba, bum, ba, bum. Very, very interesting.
I don't love this as much as I thought I would love it.
You mean in terms of the valuation or in terms of...
In terms of the numbers, not the... I knew I wouldn't love the valuation, but in terms of... I just really thought I would be like, oh, I can't wait. I can't wait to own this thing. I don't.
Well, it is part of my...
I don't think I'm getting there.
Sbux is on my list.
It is?
Because of stocks I want to own forever.
Because of the brand? And
because of the brand and the high ROIC. I didn't remember it being that high. That's a high ROIC.
Mm-hmm.
All right, here are my values. The stock's currently at 113. My low value is 42 to 48. High value is 60 to 70. Middle value of 50 to 60. I have it on my watch list at 60, which is probably about right.
Yeah.
I'll probably maybe change it to 65.
Yeah.
Mo, what do you got?
My watch list price is 65, but I'm sitting at 49 on the low end, 95 on the high end, 70 in the middle.
Now, obviously, we made different assumptions here.
Yeah.
Mo, show your assumptions here. You did 6, 8, 6. Oh, that's why.
Yeah. 6,
I did 3, 5, and 7.
Yeah. But I did 10 years.
Yeah, but 12% growth for 10 years. They had 9% in the last 10 years. I think they got to consolidate.
I put it up there because analysts said 11%. I was like, all right, I'll just go 12%.
Okay.
6 on the low. I mean,
and you're like China and India.
Yeah. Yeah.
And, you know,
if they
all those
crush.
things. Yeah.
I like to go on the high end if they crush.
You're right. So even buying it for today's price seems like it's a little banking on good stuff. So next company, what do we got? We got Ford.
Yep. So expectations came in 44 cents earnings per share. They did 63 cents. So that is huge. $37.4 billion expectation in revenue. $41.5 billion.
Whoa.
$41.5 billion.
Whoa!
So they did very well. They're only up 0.25%.
But Mo, Ford is dead.
You can't
Tesla's
compare 'em to
taking
Tesla.
over.
Yeah.
They're the worst. This guy.
There's literally a video where people are like, look how, meet Kevin said about me.
Yep.
Oh, you're comparing Ford to Tesla? Yeah, actually, I am, because they're both car companies. Mm-hmm. So yeah, I'm going to compare them. Thank you.
Yeah.
No, it's a technology company. Oh, really? How much software do they sell? How many software companies have 12% gross margin? Idiots. 19, whatever it is. What's Ford's gross margin?
But you don't
4?
understand the future.
I know.
I don't understand the future. Their gross margin is, Ford's is 15.
Oh.
Profit margin, negative 1.3. But
I hate car companies.
they are not exciting.
The stock is exactly the same it was in 1997.
Oh, that's nice.
Free cash flow from last year was negative 13 million, so basically even. 5-year average free cash flow of $9 billion. They paid out $2 billion in dividends. So you got dividends along the way.
So quarterly revenue rose 20% year over year. They reaffirmed guidance going forward. I just can't get excited about this.
I can't either.
I just can't. I did a deep dive on this on a old Saturday seminar that I did. We literally spent an hour going through this, and it was just right. I mean, it was in too hard category for me, or just don't invest. That was my category.
Man, this is tough.
It is tough because it looks cheap.
Because look at the analyst estimates. I mean, basically flat on what is going on
And
here?
I just can't get behind the entire reliance on the EV business is going to just reignite this business, and they're going to be a new
Look at this, Mo. $50 billion market cap.
Oh my God.
Enterprise value of $218 million. Too much debt.
Yeah, I'm out.
Look at this 5-year return on invested capital. 6%.
Yeah, I'm out.
Yeah, I'm out. I'm not even going to do stock analyzer tool. Guys, if you want to learn, if you want to analyze the stock and stock analyzer tool, sign up for a software because I ain't doing it. And I mean, it's just terrible. I mean, there's really no reason to want Ford right now.
No. Except that you somehow think that it's cheap. I don't know.
And it could very well be cheap, but I just think that there's too much. By the way, is this the first time this has happened?
What's that?
Look at this. Look at the 8 pillars. Everything is red, but
Oh
the
my God,
2 that are green. Usually, guys, what we have is green all the way over here, and the red is the valuation.
funny.
It's the exact opposite here.
Yeah.
I'm probably missing something on Ford, but it's a healthy dividend.
I don't know. I mean, I did take the time to look into this thing. I didn't think that we were missing anything. I just think that their reliance on EV is way too much. They want that to reignite their business.
Well, I think the Mach E Mustang, whatever it is, is
cool.
a beautiful.
Yeah.
Not cool. I think it's a beautiful car.
I don't like it.
Come on.
No, I think it's ugly.
You think it's ugly?
Yeah. The new Mach E? Yeah,
That
I don't like it.
SUV?
Yeah, it's like a weird like hatchback looking like mom car.
I think it's beautiful.
I think the Ford Lightning is sweet because
Ford
it looks
Lightning
like
is
an
sweet.
F-150.
The Raptor?
The Raptor's awesome.
What do you have in order?
F-250 Super Duty.
When's that coming?
Only God knows.
You don't
I
like
have-
the Mach?
No, I don't like it. Let's pull it up. Let's pull
It's
it up.
beautiful.
What is
Has
this?
AMD reported yet?
Yeah, I got it right here.
Okay. Good boy.
All right. So earnings per share for AMD.
Wait, no, pull up the Mach E.
You want to know?
Yeah, let's pull it up.
Mach E.
How do you say that's an ugly
I don't
car?
like I just don't like it.
Click at that first one.
This one? Well,
Yeah.
there, let's just scroll. Look at that.
It's a beautiful
I like
car.
I like the front. I don't like the booty.
Are you kidding?
Yeah, here's the booty. I don't like that.
All right.
How are they going to call that a Mustang? It doesn't even look like a Mustang.
So it's a guy with a pink Under Armour quarter zip.
Are we done yet?
All right, let's do
AMD.
AMD.
60 cents, beating
Oh, boy.
expectation of 56
Okay,
cents.
did you pull? Oh, you pulled it up already.
Oh, sorry.
I was going to ask you how much you think it's up.
Oh, 5.4 billion, beating expectations of 5.31 billion is down 2%.
And down 2%. Guys, you see the emotion? Last week, literally, you could have missed on both EPS and revenue, but as long as you have a good story, the stock was up 20%.
That's the thing. Isn't it funny how everybody's forward guidance says, yeah, we're going to have great forward guidance, everything.
All right, so they're down 3% on the nose right now. 3%, $87 and some cents. I want you guys all to remember this. Look at the all-time high, 164, November 30th, 2021. We're almost at half that price. The low in last year was $55. It got as low as $55, guys.
These PEs are awesome.
110 and 9. Guys, look at this. 1 year PE, 110. 5 year PE. So no, wait a second. Hang on a second. Time out. Mo,
Yes.
what did they actually report? So they reported what, 60 cents per share?
60 cents per share.
How many shares outstanding do they have?
Oh.
And what are they guiding for the year?
I'm going to pull that up right now.
Well, let's look at analyst estimates.
Okay.
So analyst estimates are looking for $3 a share this year.
Okay.
So at $90, that's 30 PE. Okay. And look at this, Mo. 5 years, 775. All right, so this happens. It's still aggressive, but look at this growth level on EPS.
Wow.
But aren't they diluting the crap out of people?
They are. Let's go and look at that.
AMD should stand for advanced
my God.
advanced major dilution.
That was a 10 out of 10.
I'm gonna do the Bill Gates dab when he's like this.
So in 2008,
Advanced major dilution.
look at this. 2020 and 2021, they had 1.21 billion shares outstanding. Now they have 1.62.
Well, look at 10 years ago. They had 757 million shares outstanding. Now they have 1.6.
Between,
So, guys, the
forget it.
reason this stinks, for those of you new to the channel, when they're issuing twice as many shares in 10 year, that means in a 10-year period, if the business doubled, you saw no gain because now you're splitting that. When there's issues shares, you're not getting shares. It's not a stock split. That's literally diluting you as an owner. It's adding more partners to you. That's the thing that stinks. So even if the business grew by triple, you only saw 50% gain because you went from 1 to 3, but now you're splitting up among twice as many owners, so it's basically like 1.5 you got.
Yeah.
1 to 1.5.
Yeah. Man.
That stinks.
That does stink. Should we just stock analyze to show how ridiculously overpriced this is?
Let's do it. All right, if we're going to do stock analyze, let's look at the 8 pillars first.
Okay.
What were they? Look at the shares outstanding. I think
this looks like so. If you wouldn't have told me this is AMD, I would have thought this was some hype company that was trying to make it during COVID.
Well, it is. It's advanced micro devices.
Well, it is, but they're a little more.
And by the way, AMD makes a great chip.
They do. That's what I'm saying. They're more of like they are a true business. They're not some like Peloton or something like that just came out of nowhere and tried to crush it during the pandemic. You know.
All right, so we're going to do stock analyzer tool. I'm going to do 20-year analysis. Mo will do 10.
Yeah, I don't even.
And let's just go right. Whoa, look at that! Look at that growth of less. Oh boy. Let me see what analysts are. Oh wow, big growth. Big growth. Big growth.
I gotta go a little higher than that.
Yeah, I think so. Okay. Profit margin. I think they're going to do better because if you look at Intel's profit margin when they're stable, it was 20+%. It was 20+%. Okay, free cash flow margin. PE. The PE part's going to be the best part because everybody's going to be like, you're wrong on PE. Their PE right now is 8 trillion, so you should discount them like Kevin does. It's 7 trillion.
I'm going to give them 20 on the top, on the high expectation of PE. Usually don't do that. I don't think they deserve it, but I just want to show how crazy it is.
All right. So I did 6, 10, and 14% on my revenue growth numbers. Okay. That's 20 years at 14% a year. That's a lot. So just to show you, what did they do last year in revenue, Mo?
Let's see here. 23.6 billion.
Okay, so 14% for 20 years, 26.3 or 23.6?
23.6.
That would take them to $325 billion in revenue. That's a big number. Is it possible? Absolutely. So I'm going to keep it there, but I just want to show, in case that number's red, how ridiculous the price is. Okay, profit margin. 13, 18, 23.
Okay.
What'd you do?
I did 13, 17, and 21.
When I say my number, that's your cutest.
But I didn't do my revenue yet.
Oh, I'm sorry.
That's why I thought you were just going to run through
Oh, go ahead. What's revenue?
My revenue was 7, 10, and 13.
All right, that's good.
Yeah.
I think yours is way more like realistic than mine.
Yeah, I think so. Okay.
All right, free cash flow margin, I did the same thing, 13, 18, 23.
Yeah, I did 13, 17, 21.
PE.
16, 18, and 20.
I did 15, 16 and a half, 18, same with free cash flow. Now, guys, this PE of 110, I don't want you sitting there and comparing the PEs going, oh, well, it's 110, so a discount is 40. That is asinine.
Yeah.
To me, the market average is 15. You should start there. If there's a high ROIC, which this one doesn't have it right now, by the way. However, I think there's other reasons for that. I do like seeing this. In a high growth level, that's when you adjust your PE and price of free cash flow from 15 and up. Mm-hmm. But it's hard to justify even a 25 or 30 PE. You have to have major growth for a long period of time.
Yep.
Desired return.
I did 10, 12, and 14.
Okay, so I thought about doing 10, but I still think there's a lot of issues with AMD that are kind of like,
I could see it.
It's not like, if it was like a Microsoft, I'd be like, yeah, 10's fine.
Yeah.
But I still think there's issues. I did 12, 13 and a half, and 15. Because for this is not very likely. I want that high margin of safety by putting a higher PE.
Yeah.
The stock's currently at $86.47.
Down 4%.
Oh, wow, look. The highest level does have a green.
Wow.
Low price of 32, high price of 112, middle price of 60.
Okay.
I don't have it on my watch list anymore, and the reason being, I hate how addicted they are to dilution.
Yeah.
And that's the reason I'm not doing it. What are your values, Mo?
39 on the low end, 85 on the high end, 59 in the middle. It's on my watch list for 40. But again, even at 40, like I look at that saying I need this dirt cheap, maybe $20 a share. I don't know.
So I think that's smart because even though his price is 60 in the middle, the dilution is the issue. You got to assume more dilution in the future. Yeah. Dilution is crack cocaine. The second you get addicted to it, you're just it's gonna take a lot to turn it around.
And 40 is where I start selling puts at lower prices, not buying at 40.
Yeah, correct.
That's how bad it is.
All right, guys, remember, this Thursday, 6 p.m. Eastern time, free link below, options, how to make extra money in options, covered calls, and cash secured puts. And if you want our software, $1 a day for 7 days, $7. Go to everythingmoney.com, check it out. Thank you very much, guys. Take care.